you work a lot with the aging population, with active adults on the reverse mortgage side, and helping them kind of figure out their avenues with retirement. And you also do a lot with divorce, and I mean, you're very well diversified with your knowledge base.
Yes, so I have a very unique perspective for most mortgage loan officers because I was a financial advisor for a while. I've also been on the real estate side, and I've done all the classes for the certified financial planners. So I've got some extra expertise that most loan officers don't have, and that lends me into having these more detailed conversations about what is your real financial goals, because a reverse mortgage can play into that. Also, when you're going through divorce or any major life change, I mean, Roni, you know this, people come and move down here and they're moving into retirement.
Yeah.
That's a major life change, and you need to have a full financial plan in place for that kind of thing.
Well, and to have an advisory board, so to speak, between the real estate team and the lending team. So we're going to take a deep dive into reverse mortgages today, because people want to know about them. They have curiosity about them. Some people are scared about them. So we're going to kind of come up with some pros and cons about reverse mortgages. You're going to tell us what we need to know. But from a real estate perspective, and why I have interest in this topic is because people deserve to love where they live. And for some folks, that means that aging in place is the right answer for them. As much as I love to sell real estate, and I can transact a house, the right answer for some families is for their loved ones or themselves to be able to stay in their home that they've built equity in, and just be able to age in place for that time. And so a reverse mortgage enables people to be able to do that. Tell me, what is the biggest question that you get around reverse mortgages? What is the people's perspective? What do they question you about?
So there is a lot of misinformation, and the biggest conversation starter when I even mention the word reverse is, oh, I was told not to do that. Don't do that. My cousin's aunt's uncle lost her house because of a reverse mortgage. And there's just too much misinformation out there, because a reverse mortgage is an actual tool to use. It can be a great thing. It is just a mortgage, which a lot of people don't understand. It can be refinanced. It can be, you can pay it off. You can keep it for the life of the loan. There are so many factors around it, but it is just a mortgage that has an optional monthly payment.
So that leads me to say that people own more equity in their homes than in the history of record keeping, right? So people own a lot of their homes. In some cases, people, a lot of folks buy their homes cash even. So with that, how do you, if it's the right plan for you to be able to just stay in the house and you have all of this equity in it that you need to be able to live off of without having to rely on government sources or any kind of retirement. Maybe your retirement plan it hasn't been as fruitful as you had initially planned, and now you have the stressor of life of, I need more monthly income. This reverse mortgage can allow for people to do that. What I have understood, though, from conversations is some people's goals in life is to leave a big chunk of money to their children, right? And some people's goals are just to be able to live very comfortably in their later stages of life. So a reverse mortgage is one of those plans that can enable somebody to live very comfortably in the later stages of life, with the mindset that they may not be leaving as much as a legacy, a financial legacy to their family. Correct?
Actually, You can use a reverse mortgage intertwined with your full financial plan and end up leaving more money to your family. So when you stack something like a reverse mortgage, first of all, when you sell a home, you've got all these family members that have to come together. You've got somebody like you, Roni, who has to coordinate 10 people who own this home between kids and spouses and grandkids. And they've got to coordinate selling it. So they've got to hire people to do this. Typically, they've got to hire real estate agents. There's then also some tax consequences when selling homes and probate and all that kind of stuff. But what if you were able to leave some tax-free money to your family instead of focusing on leaving your home? Because most children, when asked, do you want the family home? They're like, no, I want mom and dad to enjoy retirement.
I hear that a lot too, a lot, amongst my peers and amongst my aging adult clients as well.
Yeah, the time that you hear, no, I want to keep the house is when you have basement Johnny living down there and he lives with mom and dad, mooches off mom and dad, and he needs that house to live because he's going to be homeless if something were to happen. But most of the time, kids don't want the house. And even with a reverse mortgage, there's plenty of times where there is plenty of equity left over where the kids do get it.
Yeah. So let's talk about the fundamentals of the pros of a reverse mortgage. Give me kind of some key points. We understand they get to stay in the home. Okay, so that's first and foremost. They get to stay in the home. And you mentioned that there's no monthly mortgage payments. Tell me a little bit, dive deeper into that.
So a reverse mortgage is just the reverse of a forward mortgage. You have to pay your mortgage payments or the bank is coming to take your home on a regular traditional mortgage. When you pay those mortgage payments, the mortgage payments go down. But a reverse mortgage, you still own your home. You are on title. Just if you choose not to make a mortgage payment, the mortgage balance goes up. So that is the real difference. Also, another advantage to a reverse mortgage is that there's a line of credit piece within that grows at whatever the interest rate is. And so we have actually put together plans for a lot of people who want to age in place, maybe didn't do long-term care insurance, those kind of things, that they can use that line of credit. If you get your reverse mortgage early and put it as a part of your plan, that line of credit can start out at, I don't know, $13,000 and grow to $100,000. And you don't have to take out a home equity line of credit. You don't have to do any of those things to pull it out. And you can have a nurse come right in there and not have to pull it from your funds that you set aside to live off of.
So if I understand it correctly, the reverse mortgage is the exact opposite of a traditional mortgage. So you're actually living off of your own earnings or the equity that's in the house. You're basically taking a little chunk of that each month and it's coming back to you in the form of a check or direct deposit. And then at the end of it, what happens if you outlive the equity that's in the house?
So if you do, reverse mortgages are non-recourse. That is the big word of the day for reverse mortgages, which means that if you owe more when you leave that house than the home is worth, oh well, the mortgage.
That's the risk that the mortgage company takes, correct?
That is the risk that the mortgage company takes. And there is mortgage insurance on most of these products to help cover that.
Okay. So they don't just kick you out. Say if you own 500,000 and you live a long, healthy life and you use all of the equity and these little chunks, monthly payments back to you, and you have outlived the equity that's in the house, then that's the risk that the mortgage company takes, that they're not going to kick you out. You get to stay in the home.
You get to stay in the home as long as that is your primary residence.
I
So
think that's the key component to any reverse mortgage, right? It's got to be, well, I don't know. You tell me, Kelly. Does it have to be your primary residence?
it has to be on your primary residence.
Okay.
So a reverse mortgage stays on your primary, is only available on your primary residence. You can take income out of it, or what a lot of people are doing right now is just in retirement. The biggest expense are these really nice homes people are buying, their dream homes they're buying in retirement. They're paying $2,500, $4,000 a month, and that's out of their retirement assets.
Mm.
Instead of turning on an income stream for the reverse mortgage, you just didn't have a payment. I mean, if you just don't have a payment and you get to use the money you set aside, that saves you so much money. Or leave it in your investment account.
Say you take out a reverse mortgage, Kelly, and you have $200,000, because you don't have to own the house outright to take a reverse mortgage, do you?
No, so there is a percentage that you are allowed to go up to. So if you have let's say $1 million house and you owe 200 on it, we could probably get you a reverse mortgage for about 400,000.
Okay.
Pay off that 200 and let the rest grow in a line of credit, turn on an income stream or something like that.
So say you live in it and you've been enjoying this as your primary residence and you're taking the reverse mortgage payments each month, but you're several years into it and decide you want to sell the house. What happens at that point?
You hire your trusted real estate professional, Roni Haskell, have her sell the house, and it's just like any other transaction. You pay off the loan balance at the closing, take the rest of your money, and move on to your next adventure.
Yeah.
That's it. And then also I wanted to go back one more time. Another concern is, okay, I'm doing a reverse mortgage, but my spouse is younger than me. If I die, I don't want them to be homeless. No, as long as the spouse is listed on the mortgage, either as a non-borrowing spouse or just they're your spouse, they get to stay in the home too with no mortgage payments, even if the loan balance is higher than the equity.
So again, the risk would be that your family may not have this big chunk of money upon death, right? But now you've comfortably stayed in your home. You've been living the retirement life that maybe you've been dreaming of, or maybe it's just one that's putting food on your table, so to speak, but it's a comfortable place that you've been living off of the money that you have built up in the equity of the house. Tell me about the cost associated with taking out a reverse mortgage, because I've heard to be, the cost can be high.
So the cost can be high, but so can a regular traditional real estate transaction. That's all over the news these days. And so with it, you've got your regular fees, loan origination fees, your appraisal, credit report, attorney's fee. Well, here in South Carolina, we've got attorney's fees, title search fees, those kind of things. And then most reverse mortgages are government products, which have government-backed mortgage insurance, which is very similar to an FHA loan. You pay your upfront mortgage insurance and your monthly mortgage insurance. So it can be expensive, but it's very comparable to any other FHA loan.
Okay. What about home obligations of upkeep? People need to make sure that they're continuing to maintain the house. I mean, it's still their home, right? So whose obligations are those? Is it all of that falls onto the homeowner?
All of that falls onto the homeowner. When you close, you actually, just like every other closing, you sign that you are going to keep your home up and make sure it is safe and livable. That's pretty much it. Do the yard, keep up the things. If the AC breaks here in South Carolina, a home is not livable without AC. Get the AC fixed.
Yeah. So treat it as your own. It's still your home.
It's 100% your home.
100% your home. All right. So I will say my grandmother. We put her into a reverse mortgage, and she lived very comfortably in her home. And at a young age, I didn't even know that that's how we kept her in the house in her retirement years. But that, come to find out that was a family decision, and a very wise one at that. Not My parents didn't need her money upon death. What they needed her to do was just live comfortably within her means, and so she did actually outlive the equity that was in her home. It was a little house in Hattiesburg, Mississippi. She outlived the equity that she had in that house, and so she got to stay in place for years following that. So it was the right solution for her. So where can people go if they wonder, is this the right scenario for us, or we want to explore more? How can they start that journey?
So if you contact us with our contact information that we'll put out in just a little bit, I've got a reverse guidebook that I can give you that tells you myths versus facts, how it all works. And then we can also do a free 30-minute consultation where I can answer all the questions. We can run a super quick scenario to show you just how the equity versus the loan balance, how it all works. Mm-hmm. And if you want to dive deep, we get your financial planner involved and things like that, because a reverse mortgage is not just for the couples that need it. So I've worked with couples who, because the cost of everything, ketchup costs $5 a bottle now. Cost of retirement is so high that they didn't plan. They're on Social Security. Average Social Security according to Social Security Administration, for married couples, $2,700 a month. Mm. And they don't.
That's hard. That's a hard number for a lot of families.
Exactly. And they don't have much else. So seniors are reaching into the credit cards to go pay for life. We were able to get rid of their $800 a month mortgage payment with a reverse mortgage, pay off the credit cards. Now they're able to spend the extra $1,200 a month, so they're not going to dig back into it. Yeah. But I've got another client that I'm working with that is very exciting. This is the fun stuff. He has a really nice house, $1.2 million. And he has to start taking his required minimum distributions at age 70. That is going to push him to a new tax bracket and create a very big tax liability. So what we're going to do is we're going to take the reverse mortgage. We're going to make those optional monthly payments to match the payments, the required minimum distribution, and we're going to get rid of that tax liability. We worked with his CPA. This is how we came up to do this. And so basically he's got that extra $30,000 he can reinvest into something else and I think he's buying life insurance with it, but he's going to, $30,000, he's going to leave his family with a huge chunk of money, not just the house.
Nice. Well, very good. I know that people will probably have questions to follow, and you're a wealth of information. You lead with education first for families or individuals that are trying to make decisions about the best way forward. And I preach it to folks when they're moving here and buying investment properties. I'm like, you've got to have your team in place. It's not, you've got to have your CPA. You've got to have a great attorney that can help you get prepared on the legal side. And then your financial planner, and truly a good real estate agent and a good mortgage lender. That really is the comprising of a team that can help guide people and protect their hard earnings. People, whatever their job is, they have worked hard to get to where they are. So protect it. And that's the biggest thing. Live comfortably. And to say it again, you deserve to love where you live. I fully believe that. And so it's going to look different for each person. You're a great wealth of information, and we will put your information here for people to be able to see, contact you directly. And of course, I'm always available as well and happy to sit down with folks and help them understand what is the value of their home. Because if you own real estate, you really need to have an understanding about once a year, kind of take that conversation to your your trusted real estate agent, and ask what's the real value that I have in my real estate property. All right, well, Kellie, thank you again. And if there's questions, reach out to Kellie Collins at Integrity Home Mortgage. She's the best.
Thanks, Roni.